Gold and silver have been on massive runs lately. So the question becomes, which asset class should you own or perhaps buy more of? By the end of this video, you'll have real conviction about what to do. It's no longer controversial to say that the fiat currency system has serious issues. We're even hearing about the bond market breaking, meaning investors are no longer flocking to bonds for safety. This poses a real problem because this is how governments get money to spend. And let's be real about it. The government is too far down this path of debt and deficit spending. I believe if the government tried to rein it in, it could cause a massive depression. So here's the reality we live in. We earn our money and we have to then invest it into riskier asset classes like silver or gold or Bitcoin or even the stock market in order to stay ahead of inflation. If you follow markets at all, you've heard every opinion imaginable. Some say silver is going to go up to 200 an ounce, maybe 300. Some say it's going to crash. Some say gold's going to go up. Some say it's going to crash. Some say Bitcoin is worthless. Meanwhile, Tom Lee is saying Bitcoin's going to go to $250,000 a coin by the end of 2026. So what are we supposed to believe and what are we supposed to do? Because we know we have no choice that we have to invest in something. We cannot just hold cash. So let's simplify this. In the world of endless money printing, it makes sense to own scarce and desirable assets. We know that. There's no doubt in that. But the real question is this. It's not which one is best, but rather, are you protected to the downside no matter which one you own? The best traders in the world all agree on one thing: risk management. If your risk is controlled, I would argue it really doesn't matter which one you own. I, however, own all three. Let me give you a real world example why this is so important. My highest conviction trade in 2025 was Bitcoin. I built a $500,000 Bitcoin position by June of 2025, and I was wrong. However, my downside was protected. I did a variety of spreads, and 2025 was still a great year in the stock market for me. If you make a habit of controlling your downside so you never take a large drawdown, you will do very well investing year over year. I want to dive in to one simple trade I did on Bitcoin through the ETF IBIT so you can better understand how this works. Okay, first thing I have to say is do not be overwhelmed as to what you're looking at. When you use options around all of your holdings to control your risk, it's going to look like this. I know it looks overwhelming, but all the stuff is really easy. I just want to give you a snapshot of what I'm looking at in my portfolio so you can see some of my positions, because we will break down all my trades throughout the entire year, as well as my returns. But what you're looking at here is my current position in Bitcoin. I have $61,000 in Bitcoin. I have a variety of different long covered calls, plus some puts and even cash secured puts. I just bought some gold. I have some Ethereum. These are all very recent purchases, by the way. And then I wanted to buy some silver just for the purpose of the channel, buy it at all-time highs, and then protect myself to the downside so you can see how powerful options are. But this morning I bought 200 more shares of IBIT. That is the Bitcoin ETF. And then I did two different trades. So let's get into that right now. But this is how things look right now in my account and my current Bitcoin position. I ended up selling most of my $500,000 Bitcoin position in the latter half of 2025 and then started buying back in when it got back into the 80s. So far, Bitcoin has not done a whole lot since I've been scaling back into it. And I decided to buy some Ethereum too. Could Ethereum and Bitcoin go up? Yes. Could they go down? Yes. But the whole point is that I am protected no matter what. And if I lose a little bit of money on positions, do you know what I think to myself? I think, well, I had no choice but to try to go for a return, because this fiat currency system we're in, where they debase the purchasing power of our currency, is brutal. And I know I'm at least trying. So I make peace of mind with that. But anyway, here's a small portion of my portfolio. Let's get into the two trades. So I bought 200 shares of IBIT this morning, and that is January 28th, 2026. And I did two different trades. I just want to go over one trade in this video. On the one batch of shares, I bought a 45 put that goes till October 16th, 2026. And to use round numbers, we're going to say that cost me $500. What this does is it gives me the right to sell 100 shares for 45 a share come October 16th, 2026. That means in theory, Bitcoin could go to zero and I can still sell sell 100 shares for 45 a share. I bought the 100 shares in terms of this batch. I bought the shares for about 50 a share. So if I would just do the protective put, and let's just say it cost me $500, and let's say that's all I did. If Bitcoin went to zero, I would have a paper loss as IBIT goes from 50 to 45, and then the put kicks in and protects me. But the put cost, let's say $500. So my max loss would be $1,000. That's if I didn't write a covered call. But I like to write a covered call at a high strike, which then pays for some of the put protection. This is a conservative trade. I picked only a 65 strike, and we're going to say for the covered call, I got paid $600 to make math easy. And once again, the covered call means that if IBIT is trading above 65 a share, I have to sell it for 65 a share. So here's the worst case scenario. The worst case scenario, let's just say Bitcoin goes to zero. I have a paper loss as it draws down from 50 to 45 of $500, then the put kicks in and protects me. But the put cost $500. However, the covered call paid me $600. So the put really didn't cost me $500. Essentially, but the covered call paid $600. So really the put didn't cost anything. And I still have an extra $100 from the covered call. So my worst case scenario is around $400. Best case scenario is if IBIT does really well, Bitcoin does really well, and is trading above 65 a share. You simply take the price you agreed to sell of 65, you subtract $50, that's what you paid for the shares, that's $1,500. The put cost $500, but the covered call paid $600, so that's a profit of $1 per share. So the max gain on this batch of shares is $16 per share. So we have a max loss of around $400 and a max gain of around $1,600. It has pretty good asymmetry, nothing crazy, but this is more of a conservative trade I did. And I like trades like this. I can sleep well at night. If Bitcoin goes to zero, okay, the most I can lose on this batch of shares is around $400. And the most I can gain, if it does well, is $1,600. And $1,600 gain at 16 per share when you buy the shares for 50, that's a pretty good annualized return. I will be updating you on all my trades and my portfolio throughout all my videos on this channel. I hope to see you back.